Good evening, everyone, and welcome to the Lock in Your Success Trade and Market Update for April 28th, 2013. Before we get going, please remember that any information contained in this presentation is for educational purposes only. We are not broker-dealers, nor are we financial advisors, and we are not making specific trade recommendations. Also, any trades and/or results covered in this presentation may or may not be live trades. Anytime a trade is computer simulated, the results are believed to be as accurately represented as possible, and they are done real time as well, so to keep the results as real as we can. And also be aware that the risk of loss in trading options can be significant, so please be aware of all your risks prior to placing any trades, and please trade responsibly. Make sure you visit our trading blog. If you're watching this on YouTube, we have lots of great things there. Also, keep in mind we have a lot of great programs on the things we cover in the video. One thing I'd really love to mention is that we are having an open house on group mentoring sessions for May. That means that anybody who registers can sign up and attend 2 meetings absolutely free, and you can get lots of great information on the Bearish Butterfly, the ROCK, and M3 trades, see how we do things, and see what the mentoring sessions are like, and determine if that's something that you might be interested in the future. All right, so let's move on to the markets. So here we are in the Russell. We had a very hard, very large bounce. I believe this day here was Friday of last week. And if you remember in last week's update, we were saying that we're coming into a support level with the Russell and we're likely to have a fairly large bounce. I was under the belief that the market range is going to be sideways, and I mentioned by sideways I meant stay between this support level and probably this higher resistance level up here at the 950 area. We had a very aggressive up move, but in general we're still in this very wide sideways pattern. And for the coming week, I expect to stay in this sideways pattern. I wouldn't be surprised to see possibly even test these highs and then roll back over all the way down to 900. I just think we're going to keep this sideways range because the traders are fairly confused right now. As far as the SPX, we were saying that the SPX charts were bullish, and we came down to the support level, and of course we blasted off this week, and we came right up close to all-time highs. And we backed off a little bit here. Again, I wouldn't be surprised to see a push to all-time highs. We're going to want to watch the SPX. If this really starts to break into new highs, and in conjunction with that, I'll show you some moves in the Dow to watch for and some moves in the NASDAQ. If those happen, the Russell is probably going to break out to the upside. However, I am still expecting more of a sideways move. If you take a look at the Dow, we have the backside of this trend line where we came right up to it, and we've been riding the backside of the trend line. That's what I would watch in the Dow. If we break over this decisively, then that would be very, very bullish, and everything's probably going higher. As of right now, I do expect us just to kind of travel this trend line for a little bit, kind of hang underneath it, possibly back off towards the end of the week. And as far as the NDX, we had this, we're holding this broadening pattern, which we've drawn in here. If this comes to pass, we are going to run somewhere close to our resistance right up in here. Whether we're going to make it this week or not, I don't know, but that's the most likely next move. Any move that starts breaking into new highs here up over this horizontal line is going to be considered very bullish. So if we get a break over this with the NASDAQ, we get a break of this uptrend line with the Dow, then those are all signs that the Russell may break to higher highs. And again, the SPX, if that breaks to new highs, that's a sign or signal that we're going higher. As for right now, I'm still in the sideways camp until I see some kind of proof that the markets are actually going to do something here. Okay, let's take a look at our positions. Before we get too involved, I'd like to mention, again, we're having the open house for the month of May, and that's going to be the first and third Thursday. That's this Thursday, and then the third Thursday in May we can come in and join the group mentoring sessions. We're going to do some extensive looking at some of the positions, especially the Bearish Butterfly this month, because there's a great great educational opportunity in that. If we take a look at this now, or better yet, let's go back and take a look at this on what we were looking at last week. If you remember right, here's the position as of not last Friday, but Friday the 19th, that's 2 weeks ago, what we were showing on last week's update. We had taken our 940 butterfly and rolled it down to 900 because that's what the guidelines had said to do on Thursday when we hit the 900. I had mentioned that the market was extremely bullish and I would not recommend doing this because of the bullishness of the market. We were at a support level. We were likely to get a very large bounce. If we take a look at the charts here, this is very similar to what we were looking at back in November of 2012 when we were in a bearish butterfly and we got right to this day here and the rules called for a rollback. And at that same time I was stating every time the Russells hit a major support area, because the market's been so bullish, we've gotten a very major rally off of it. This is a very similar situation, although I don't think the rally is going to be as high, but we're very clear about what to do when this actually happened. That wasn't a good idea to roll back to at the money at that point at a major support level. This isn't as major of a support level. I don't think we're going to get as major of a bounce. Matter of fact, I think we're actually going to be kind of range bound here. But same principle, exact same principle. Russell comes back into a support level. Guidelines tell you to roll back at the money. You really need to watch that at that point and maybe do something else. We'll show you what else in Thursday's meeting. But as for now, this is what happened last week, or the week of the 19th. If you go back and look at the video, I was saying it was not recommended to go into this positioning without some sort of hedging to the upside. And because of that, on our live trades, we did roll this back and we did hedge to the upside. So this trade going forward is actually a paper trade. However, I really like what happened to us here because this is going to be very, very educational and because we did get that large bounce that we were expecting. So if we take this and roll this up to this Friday, or actually we'll just go to Tuesday here. End of day Tuesday, we got a very, very significant bounce and it scaled us. Also, last week when we were talking, I said I'm going to run into expiration lines guidelines early. So that's exactly what I did on Monday and Tuesday. I'm watching this thing. If you look at our T-log, I come in here in the morning on Tuesday, 9:55, right before 10 o'clock, and we come in and we just completely reposition this thing. And as we went forward, we just kind of followed the expiration guidelines where we hit our maximum delta. We scaled into the position, and by the end of the day, we ended up in less than 10 900s. I don't remember how many we pulled off, but we pulled a few off here. We had 10 920s and 10 940s. As we go into Wednesday, I don't think anything happened on Wednesday, except of course the Russell went up further, but I don't know that we had to do anything. Let me take a look. Wednesday would be, the 24th, yeah, so we did do some stuff Wednesday. We would have continued to remove our lower butterflies down here at 900. It looks like I took them all off by the end of Wednesday. So I was in a bunch of 920s and we were in 10 940s at that point, and we added 3 960s. Thursday the market continued to go higher. And you notice we're staying with the trade, but we are getting hammered. We're down to almost half of our loss number at this point, and now we're fully scaled into the 960s. We are fully scaled into our 940s, and we have our 920s on. Did I pull some 920s? I thought I pulled some 920s. It might have been later in the day. Nope. So we're just fully scaled in. Triple butterfly at 960, 940, 920. And this is what the position looked like as of Thursday. Friday, because the market was down and settled in a little bit, the profit came back quite a bit, a few $1,000s. And if the market settles out like we think it's going to, we may actually do okay here. If we get a hard down move, we're going to start getting chopped back and forth here. And here's our position now. We're down about $5,000. again, like I said, if you had turned and either hedged this as an M3, or you left the trade alone, or converted into a ROCK trade, any of those options would have given you, drastically different results, as we talked about last week. And this is some of the stuff that we're going to go over on Thursday. So just tune in for that. And let's see, if we go to our next trade here, we'll take a look at our June M3, which is in very similar condition as it was last time we left it. During the week, we did some verticals. We rolled some, I think 5 of these 890 shorts up to 900, and then we rolled 5. Then we ended up with 10 short at 890 and 10 short at 900, and then that was on Tuesday, I believe. And then on Thursday, we rolled another 5 up here to 910, just to control our delta numbers. Towards the end of the day on Friday, we're looking at down $572, which is pretty much similar to what we were last week. Delta's a little bit more positive than I like, so I may have been a little bit aggressive with the moves here. But if you take a look at our analyzed graph, the position looks just fine. We're sitting here outside the tent, but our Greeks are good, so that's not an issue. And as time goes by, we're going to start getting some negative delta here. As long, a down move would be good, but as long as it's not too fast. So here, and that's basically the M3 position for June. If you want to see the T-log, here's what we have. Our 5 vertical spreads on Tuesday, and on Thursday we did 4 and then 1 on that. And there's the current position. If we take a look at the ROCK trade for May, this was interesting. If you remember, we entered the ROCK trade as an M3 position. We entered that on, let's go with May ROCK trade, that would be nice. We entered this trade on the 19th, and if we go back, you'll see we entered it as an M3 trade. This is what we were looking like on Friday. We were down about $300. Nice looking M3 here. A little bit of gamma trend problem to the upside, but nothing too terrible. We come in here on, let's see, on Tuesday. Oh, not Tuesday, on Monday, the 22nd. We add 5 verticals, so we go to the end of the day on Monday. I did that after 3:30, so I have to go another half an hour. We rolled some of these 890s here up to 900, and the position looks like this. So we're just starting to level it out. If we come on to the end of the day on Tuesday, we did 5 more verticals, and now we have 5 short at 900 and 5 short at 910, and the position looks like this. It's a very, very nice looking healthy M3 trade here. And when we come to Friday, we finally, we finally got a fairly nice shot up here on Thursday, a nice gap up and run. And when that happened, we were to the point where we were outside of our long strikes. I decided to convert this into a regular ROCK trade. So I closed the butterfly positions out here. I rolled up, and I believe I did that in the morning on Thursday. And if I look in here, yes, I did, right, 940, not too far off the open. I came in here and I converted this into a ROCK trade. It would have been nicer had I waited later in the day. I could have got some better pricing, but I just decided to do it right in the open. I thought it was a good opportunity. I had time to do so, so I came in here and did that. So if we come in here to Thursday morning, I'm going to just go to 11 o'clock for now. You'll see that the M3 trade's gone. I came in at 920. When I did the trade, the market was under 940. So, or at least when I started doing it, I came in here and I bought these 20 put butterflies at 920. I bought 10 at 920, 10 at 960. Because the market was, initially I was going to go into the 920 and maybe do like 7 960s. However, as I was doing this, the market continued to go up, so I came in here and filled out the 960 range, and the market stopped going up. And if we run that to the end of the day here, we are looking at, or we bring it to Friday afternoon. That's going to be that's the last adjustment we made. We didn't do anything on Friday. We're still sitting here at 10 920s, 10 960s. We're pretty much right in the middle of our graph here. If the market settles in here, we'll be doing good. If it backs off, we'll make our usual. If it goes up, we'll make our usual adjustments to the upside. The best thing for us would just be if this thing would creep up into the 965, 970 level. It'd make this a really nice trade this month. If we get a down move, I'll need to decide if I want to do the rollback and go into cat position, or if I want to go into a reverse rock type of a position, and we'll go from there. And the only other trades we have on is we have a V trades on, which I did make a couple of minor adjustments to also with the large moves. We have the May V Condor. All this got was on the 23rd. I sold, if you remember, we had that harsh down move. I had to buy back one of my 870 puts. Well, I went ahead and I sold it again to correct my delta to the upside. And on the 25th, because we had the continued up move, I rolled my put a little bit further away from the money. So I had the 930 put. I sold that and bought a 910 put, and the position currently looks like this. We're pretty much in the center here. This looks like a good trade. Not going to take a ton this month because we kind of got whipsawed, right? We came all the way down here and we had to buy back some of these. But more than likely we will expire this thing. I might be able to get $3,000 out of it. We'll see. I might be able to kick in a little bit more profit here, but it looks like it's probably going to be about a $3,000 trade as long as the market remains reasonable. Of course, if we creep down, we may get into the wing here and make a little bit extra, but we shall see. And as far as the V Condor for June, with the large up move, I ended up buying back a couple of these 990 calls. You can see here I bought two of these back on the 24th just to kick our delta back where I wanted it, and the position now is about minus 75 delta. It's up a couple $100, looks like this. And we're doing fine. If the market stays up here, that's great. If not, we come back into here, we'll have to start raising the V a little bit to get our expiration graph above zero. But as for right now, if this market continues to creep up, as long as it's not too fast and we creep up into here, we still have a good chance to make something decent here. So that is all our positions. And like I said, we'll be going over as many of these as we can. I think we're going to focus on the Bearish Butterfly on Thursday because this is a very great educational trade this month with on how to take and use maybe some M3 positioning, maybe a little bit of trade planning, and in rock positioning with a Bearish Butterfly. When you get to a situation like that where the rules say roll back, maybe I want to cover my downside risk, but I'm also concerned about the large bounce. So I think it's going to be a great session. So hopefully you'll join us with that. Oh yeah, and I will post the link to the session probably tomorrow. I don't have an actual link right now, or you can contact Seth at SMB Training, and he can provide that for you as well if you haven't gotten one from him already. And that's all I have for now. Have a great night, everybody. I'll keep you updated with any changes, and I look forward to seeing you on Thursday. Good night.